As turmoil hits the banking sector and the Fed continues its fight against inflation, new challenges are cropping up for American consumers. Rising interest rates continue to have an impact, especially when it comes to making serious purchases like a home or a vehicle. Correspondent Markie Martin is live. And Markie, the banking turmoil is making it harder for people to get loans.
Yeah, Nicole, you hit the nail on the head there. We're talking big ticket items, homes, properties, cars, and uncertainty in the banking sector is not only impacting Americans' psychological approach to how they're spending money, but it's also impacting where they're deciding to put it. So for banks losing customers, that is squeezing their ability to lend.
American wallets bending under the strain of inflation.
I'm just hopeful that things will get better for everybody. You know, we all need a break.
With the Fed raising interest rates 8 times in a year and another increase expected this week, consumers have felt it at the grocery store, the housing market.
We want to buy a house, and that's just not going to happen.
And now, in the wake of the Silicon Valley Bank collapse, loans for big ticket items like homes and cars could be hard to come by. High interest rates and recent bank bailouts have caused many depositors to move money from smaller banks to larger institutions, making it more difficult for those regional banks to lend.
The first question was, how's that going to impact the auto industry? And there were only a handful of companies that were tied into it, none of them major. The biggest name that you would know is TrueCar. They received a significant amount of funding from Silicon Valley Bank.
Mike Caudill is a transportation correspondent for Our Auto Expert. He says with it being harder to nail down a car loan, car manufacturers will likely bring back fair prices, the likes of which we haven't seen since the pandemic.
Good part of this is that dealership lots are going to start to see vehicles come back to dealership lots. But what does it mean as far as actually buying the vehicle? It means consumers are going to have to negotiate harder than they ever have. And the good news is they can.
According to Kelley Blue Book and the Bureau of Labor Statistics, the average new car price is nearly $50,000, and used car prices have gone up more than 40% in the last year. According to credit reporting firm Experian, in 2022, around 80% of new car purchases and about 40% of used car deals involved financing. Caudill says big names in the industry aren't going anywhere.
Consumers in a period like this where inflation numbers are high, they're going to go with brands that they know are not going to go anywhere. They're going to go to a Ford. They're going to go to a General Motors. They're going to go to a Toyota. They're going to go to a Lexus. They're going to go to brands that they trust.
And Caudill also offered up some tips and tricks for those hunting for a good car deal or a good car loan right now. He said, don't be afraid to shop outside of your hometown, especially if you live in a big city. Oftentimes those smaller dealerships, those smaller lots, much more willing to negotiate. Also, don't be afraid to shop around different banks for the best car loan. If you are not finding luck at your local bank where you've always gotten help, take your business elsewhere. Nicole.
Absolutely. Do not be afraid to shop around. Thank you, Markie. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.